What's up, everybody? Good morning and welcome to another edition of your Bitcoin economic calendar, where we cover the news and market moving events that you need to know for the upcoming week in Bitcoin. Today is Monday, November the 2nd, and we have a very action-packed week this week with the US election scheduled for tomorrow. We also saw Bitcoin's second highest monthly close ever over the weekend. And there was also a very interesting interview in Bloomberg over the weekend with Ms. Ruth Krivoy, former head of the Venezuelan Central Bank, with a lot of lessons there on what we can expect or what we can learn from central banking in times of crisis. More on this in our analysis today. As always, we begin with Bitcoin celebrating 12 years from publication of the white paper this weekend with very significant price action. On Saturday, we saw it close on its second highest monthly close ever at 13,804, which was just shy of the highest ever monthly close of December 2017 at 13,863. While Bitcoin is on a clear uptrend from a technical standpoint, this 13,900 level is Bitcoin's second strongest all-time resistance, with the final one being the 19,892 level or its all-time high. Now, because of the significance of this 13,900 level, investors may be looking to reposition here, which can turn it into a contested level. Now, looking at the weekly chart, which is the candle that we follow in the economic calendar every week, we see that it also had a very good week, up 5.57% at 13,771. And as we've mentioned in past or previous episodes here, there are significant tailwinds for Bitcoin, and it is likely to continue to outperform on a relative basis in the near term on both equity and gold markets. However, it is common for markets to take breathers heading into events with uncertainty, and we do have a potential wildcard scenario for world markets this week, which would be the potential of a contested US election. So more on this in our next section. Now, moving on to the S&P 500, we see that it closed down last week 5.57% as the people of the United States head to the polls tomorrow to elect a new president. This in the backdrop of increasing COVID cases all over the US, and with the two candidates showing very different plans on how they're going to deal with the situation if they are elected. Now, while elections will flare regardless of the outcome, the world will be fixated on the speed of the process and whether the outcomes are accepted by the candidates. In reality, from a market context, the winning party itself can be somewhat irrelevant compared to the risk of not getting a decision at all, or the results not being accepted. Now, as we discussed in the previous economic calendar, most market participants are hedged for short-term volatility. But uncertainty can remain for longer than market participants are hedged for, and that is the wild card. Now, politics aside, we have over 1,000 companies reporting this week in the US, many in the travel and energy sector. Now, while there has been already a lot of pain priced into these sectors, it will be interesting to keep an eye out on the trends they spot for their guidance and how this affects potential conversations around stimulus again. Moving over to gold, we see that it had a pretty rough week last week, down 1.22% heading into the US election. One way to interpret this is that the markets are essentially taking a breather until it has more clear guidelines on US stimulus. And with the rare chance of a contested US election, some investors may be taking some money off the table and waiting to reposition once the continuity is confirmed. Moving on to the Ftxd5 Index, once again, we see that, not surprisingly, the index had a really rough week, closing down 11.46% as investors continue to head for the door. And it is and investors in the DeFi space are very likely being lured by Bitcoin's momentum. With the sector itself failing to rally around the positive momentum that Bitcoin had this week, it is very likely that the sector as a whole continues under pressure in the near term. So in today's market trends section, we're going to talk about central banks and how they may affect Bitcoin. Over the weekend, we had a really good interview out of Bloomberg where they had Ms. Ruth Krivoy, former head of the Venezuelan Central Bank, answering questions about her experience and essentially expressing her views around the role of a central bank and some of the lessons that she learned during her time in the Venezuelan Central Bank. In her interview, essentially, she shed some lights into the role that central banks need to play in a crisis scenario in emerging markets and essentially developed markets as well. She also spoke about the tools that they have at their disposal what they're experiencing today and why the issues they're experiencing today may be about to get worse. So first, I think a good place to start would be to talk about her view in the role of a central bank. In her view, the role of a central bank is to rein in excesses or to avoid excesses without hindering growth. She says that central banks should not be politicized, and that although certain situations may require unconventional monetary policy, the central bank's role is to have a plan to rein those policies back into normality. The performance of a central bank can be anchored or measured to a few pillars, such as the inflation targets, the foreign exchange rate targets, and the budget deficit targets that they have. Their ability to implement monetary policies without throwing these measures out of their targeted amounts is what can be thought of as the fiscal room that a country's central bank has. And lastly, during the time of a crisis, Ms. Krivoy mentioned that a central bank's primary role is to maintain the confidence of the people in the national financial system. This can take a few different forms depending on the vulnerabilities of your system. Now, in times of recession, companies need loans, and central banks are called in for support. However, there are some central banks that have very little leeway to move towards stimulus. In places like Venezuela or Iran, countries that have very little fiscal room, any new currency or any new unit of local currency that is pushed out into the system heads directly to the foreign exchange market looking to be exchanged for a dollar, which in turn pushes inflation higher. In emerging markets where there is very little confidence in the central banks, people look for dollars with every new unit of currency that they can get. So, central banks have a really hard time implementing stimulus and putting new currency units out in the streets without simultaneously pushing inflation higher, which is a really big sign of instability to the international community. The other option is that you can implement these looser monetary policies into the economy, but at the same time, you have to implement capital controls, which is another big sign of a lack of confidence in a government. So they are between a rock and a hard place. A great example of this is Venezuela, which Ms. Krivoy very clearly explained. They really need more stimulus to prevent the recession from getting worse. However, they know that doing so will inevitably end in more inflation. The regime, instead of moving towards reforms, is moving towards more authoritarianism. Which brings us to Iran, a country whose foreign reserves have been decimated, but that its rich fossil fuel reserves allow it to produce cheap energy. Its desperate central bank announced this week that it would be the sole buyer of any Bitcoin mined by Iranian Bitcoin miners, and it would use those Bitcoins to fund its imports. Desperate times call for desperate measures, and the recent move from the Iranian Central Bank means that Bitcoin has officially entered a central bank's balance sheet. This move has a plethora of implications, and we will be covering them at length in our next issue. And now moving on to our Bitcoin difficulty commentary. As always, we have a lot to talk about on the difficulty front this week. We actually saw a very large hash rate drop over this period, and we actually had the Bitcoin difficulty adjustment delayed and has been pushed back until it's estimated to occur tonight. The drop in difficulty will be significant, estimated at a negative adjustment of 13.74%, so adjusting down to 17.25 terahashes. This reduction in hash rate has caused some congestion in the Bitcoin network and is allegedly due to miners in China, which control a large amount of hash rate, repositioning their equipment due to the end of wet season. Now, while this creates temporary congestion in the network, the next adjustment should essentially get transaction speeds back to normal, and it will also make the remaining miners more profitable. This creates an incentive for them to make the network even more secure by adding more hash power, and it got me thinking, Bitcoin's incentive structure is really a thing of beauty. So to wrap it up with what's ahead for the week, as we mentioned earlier, the big event to watch for this week is the US election. And the main thing to look for there is how quickly a binding decision can be reached. Outside of politics, we have a lot of earnings out of the US, and they will likely highlight the need for renewed stimulus conversations. Bitcoin will likely continue to outperform on a relative basis, but it is important to watch out for the wildcard scenario of a contested US election, which could throw all markets for a loop. We do hope that that is not the case, and we wish our friends and clients in the US the best of luck as they go to celebrate their democracy tomorrow. And as always, we will continue to keep you updated with any relevant information throughout the week through our social media accounts at Hodl with Ledin. Also, we're going to be in a C5 versus D5 panel this Friday, talking to our friends at MakerDAO in the LATAM Blockchain Summit. And don't forget to check out Ledin.io if you don't yet have an account where you can earn up to 11.7% on your USDC and 6.5% on your Bitcoin. Thank you, everybody. Have a great week and stay safe.